Dan Dolev is with us, Executive Director of Equity Research, Business Services and Payments at Nomura Instinet. Dan, always a pleasure to have you here. The stock is getting slammed today. What's the deal? Because the numbers and the growth still look like a company that is growing at a good rate, but the market's just not having it.
100%. Thanks, Oliver. Always a pleasure to be on your show. I think today is just an expectations management, situation, because people were expecting a raise to the annual revenue guide and EBITDA guide, and they didn't give it. And so I think mostly what the stock is reacting to today is an expectations management game. If you look at the overall fundamentals, Oliver, they're as good as ever, right? The Cash App is producing $135 million a quarter, and it's outpacing Venmo by about a ratio of 1.8. So Venmo, on an annualized basis, they're doing $540 million of revenue. Venmo only does about 300 this year. So very good, higher revenue on a per user basis. The business is growing 43% organically, ex M&A. And I know GPV is slowing, but this is a law of large number. If you think about the incremental GPV per quarter, it's actually accelerating. So you went from 3.9 to 4 to 5.4, just dollar GPV. So it's just a law of large number. I think the optics don't look good, but the fundamentals are rock solid in my view.
Walk me through that point about GPV again, because what I see is about a 25% growth on an annual basis. And then what, wasn't it about 30 a year before? Am I getting those numbers right? About 25% now, 30% growth rate a year before. Is it not slowing a little bit?
It is slowing, just the growth, the actual percent growth is slowing, but the incremental GPV dollars, if you actually take the GPV today, about 26 billion, and subtract it from the GPV last year, you're getting a bigger dollar GPV. They're getting more GPV.
Got it.
But remember, Oliver, the key thing about Square, and I think that's what a lot of people are missing, they're not solving for GPV. This is a payments company this is a software company, so to say, that monetizes through payments. It's not just a payments company. So what you have to look at is the absolute revenue growth, and the absolute revenue growth, or the absolute revenue yield, which is notching above 2%. So they're going, they're circulating $1 of GPV more and more frequently through the ecosystem, and that's what people should be focused on, not just the metric on the payment.
Okay, so for the growth element then, we've heard their case about entering the loan business. That last year was a really big deal. That was kind of around the peak for the stock. What are we hearing now about what's going to drive the either new incremental business growth apart from the overall, swiping and spending by the consumer? Does Square need to keep being innovative?
I mean, if you think about just the simplest, yes, they are, and they are very innovative. They are probably the most innovative, if not the most innovative payments company. It's almost like what we say to investors is you own Square for what you don't know, what's not incorporated into your DCF, because nobody knew that the Cash App would come out of nowhere and produce $540 million of revenue per year, right? So you almost think about it, what's the next big thing they're going to do? If I had to take a guess what the next big thing they're going to do is, they're going to go down market on the e-com side, and they're going to offer more and more e-com deals, omni-channel deals, to compete with the Shopifys of the world, the Stripes of the world, right? If you think of Eventbrite, for example, which is coming online or live in the second half, right? That used to be a business that did not process with Square, and now Square is a processor for e-com business. That's just the beginning of sort of an e-com era for Square, and I think it's going to get more and more and more.
The DoorDash thing, the sale, what does that tell us? I mean, I know this was years back. It seems like from every calculation I see, they're going to make a good chunk of change on it. Any thoughts on what that tells you about their involvement with that part of the business in the industry, the delivery and restaurant industry?
I think it's a fantastic deal to get rid of Caviar. Now, not that Caviar is that bad, but this is not their core competency, right? Their core competency is focusing on these two ecosystems, the seller ecosystem and the Cash App ecosystem, and then combining those two ecosystems. Caviar is good, but they don't want to be in this hyper-competitive, ultra-competitive food delivery market. Let DoorDash do that. They do a better job there. Let Square focus on payments and integrated software and everything that merchants need. And that, to me, is a very bold move to say, hey, this is not what we do best. Let's not do it. Let's partner with someone else. So I know the pushback we're getting today is that they sold it for too low of a multiple, and that means that the multiple that Square was valued at is too high of a multiple. But in my view, this is just sort of a valuation comment. the fundamentals is everything we focus about, and I think that's what investors should be looking at, and they're looking fantastic.
Have you changed anything on the outlook, price target, or valuations that make sense?
Absolutely not. I mean, our numbers, we've tweaked our numbers, but they are, essentially in line with what we had before. I don't think anything has changed after the sprint.
All right, Dan, appreciate it. I know you got to run, so we'll make it quick today. Thank you, Dan Dolev,
Thanks,
Executive Director
Thank you.
at Nomura Internet.